Hi, this is a quick update video on Curve Finance regarding where to put your money. So Curve Finance is a DeFi application, probably the safest of the bunch. It has been audited 3 times by Trail of Bits, Mixed Bytes, and QuantStamp, so I had to look that up. It's been around for quite a long time, so the chance of Curve being hacked, in my opinion, is relatively low, and thus I feel comfortable putting my money here for passive income. So the way this passive income is generated is through the swap fees, right? When you swap here on Curve, you've got comparatively low fees. So on a decentralized exchange such as SushiSwap, for example, we've got fees of up to 0.3% per swap. SpookySwap is one of the cheaper ones with 0.2%, but here on Curve, when we swap stables with one another, we've got 0.04%, so 1/5 of that. And when you swap, for example, Bitcoin versus Ethereum, we've got 0.1%, so still very, very low. So swapping here, the common trading pairs on Curve makes a lot of sense. If you go in and out of Bitcoin or in and out of Ethereum, don't do this using SpookySwap or using PancakeSwap or anything like that. Use Curve where you can. Now for PancakeSwap, that's a different story. That's Binance Smart Chain, but then maybe just bridge your money over. But these are the blockchains that are supported by Curve. Now this video is about depositing your money, right? So when you deposit your money into Curve, you benefit from these swapping fees. So half of the swap fees, they go to the people that put liquidity into those pools. And so for this video, I want to go through the different liquidity pools. I haven't done that yet and want to basically find out for myself, and of course for you guys, what is a low risk, non-crypto exposure liquidity pool that doesn't have too much gas fees and where we can get quite a bit of an APY, or here it's called APR, right? Annual percentage return. So this here is Phantom. Phantom has very low gas fees. I'm not going to look at Ethereum whatsoever because all the return, especially when you trade in and out of this several times, is being eaten up by the gas fees unless you really deposit tens of thousands of dollars each time. So we're going to look at the cheap blockchains, which is basically everything but Ethereum. So we start off with Phantom, and what we can find over here, so I've already deposited here, this is a little hint, we can find the base APY, so that's what you get on whatever this liquidity pool here is consisting of. And then on top of that, you also get tokens paid out in these different rates, right? So when we deposit here on Geist, the pool is comprised of Geist DAI, Geist USDC, and Geist USDT. And so on these 3 stablecoins, you get 3.2% per annum. It's not a lot, but on top of that, you also get paid out in these kind of tokens. So once you withdraw, you also get some Geist, some CRV, some Phantom. So you add all of this together, right? So you've got here around 8% plus here those 3%, you get 11% per annum just for being in stablecoins. And what you're betting on is, of course, that the Geist protocols, they don't break, and that the, for example, Tether pack will not break. So that's maybe an additional thing here to say. So for some of those liquidity pools, as for example for this pool, you don't just get the return from the ongoing swapping here on Curve, you also get the return from that money being rerouted to a specific application that then potentially lends out that money. And so you're basically profiting twice, but you are exposed to the, for example, smart contract risk that is here on the underlying platform. So I like this. 11% is really, really nice. And Geist is also a player that's been around for quite a bit. This is a quite nice liquidity pool. I do stay away. I tend to stay away from the liquidity pools that have a V2 on it, because then you've got assets underlying here that are fluctuating in price. So you are here exposed to Bitcoin and Ethereum. If you want to be outside of the market, you simply want to be in stablecoin, you get rewards on that, and you don't want to lose money when crypto goes down, then you should not go into those V2. So the rest here is all stable pools. The 2 pool is a bit less risky, right, than the Geist pool, because we don't have the Geist exposure. And so we also get less return here. So this is 7.5% roughly. So these are the 2 pools I think that make sense on Phantom. Let's see what we can get here on Avalanche. So what you have to be aware of is whenever there is factory, there's also potentially more risk involved, because these are not by the Curve team. These are simply permissionless pools. So I'm not really aware what the exact risk is here, but they say there's no preliminary vetting from Curve. So Always have to take this with a grain of salt, especially when here the volume is relatively low. Then I would probably stay away from most of those factory pools. This here though looks very, very enticing, right? USDC 22.5% is a huge yield. If you guys know what the risk here is, please let me know in the comments. I think everybody here would be very interested in exactly that. But this has been used quite a bit, right? And 22.5% on stables is very, very interesting. Now this pool we can again forget, right? We've got Bitcoin and wrapped Ethereum in here. It's a V2 pool, so let's forget about this. Unless you want to have exposure to Bitcoin and Ethereum, I don't think this makes too much sense. By the way, in case you're wondering, if you do want to have some exposure, usually these assets, they are split in equal parts. Or at least that's the target of the pool, to split those assets in equal parts. So if you would deposit over here, it will probably be around 60% in stable coins and 40% in crypto, right? So 20% Bitcoin, 20% Ethereum. So this would be basically your portfolio of assets. And you've also got an additional risk called impermanent loss that's in here. So it gets a bit more complicated. I personally use Curve for being in stable coins when I'm not in the market. And so here we've got 11.5%. So not much better compared to what we've seen on Phantom. The advantage over the Geist pool on Phantom is here for AVAX that we are exposed to AAVE, which one might argue is a more solid project, right? At least it's way larger. It's got better traction. So you get pretty much the same return here, more or less, compared to the Geist pool, while potentially being involved in a lending platform that's less risky. So if I had my money on AVAX now instead of on Phantom, then I'd probably deposit it over here. By the way, you can at any time always simply bridge your money over. This is pretty cheap. So when you use any swap, for example, you can bridge your money from Phantom to Avalanche for like $1, basically $0.9. You simply have to make sure when you do this bridging on any swap that you also use stable coins that you switch over. Once you bridge a fluctuating asset such as AVAX, right? You bridge over wrapped AVAX from Avalanche to Phantom, then you pay a ton of fees. But for stablecoin bridging, that's very, very cheap. So this might be quite a nice pool actually. So the way here this return is generated is not just from the swapping, right? It's also from the lending. You can actually see this when you hover over this, right? Pool APY, so that's the swapping API plus lending APY. Let's go to Abitrum, a much, much smaller blockchain. And over here, again, we can forget about the Bitcoin wrapped Ethereum pool, but it's always good to have these pools, right? When you trade in and out of Bitcoin or in and out of Ethereum, doing this in these pools does make a lot of sense. It's way cheaper than anywhere else. What we've got here is 8.9% paid out in CRV tokens. So this is another risk, right? You don't get paid out this additional APR. You don't get this paid out on the stable coins. You get this paid out in that token. So when the token fluctuates, your return here will fluctuate as well, right? So every now and then you might consider just claiming those rewards. And then if you don't want to be exposed to CRV, move them again to stable coins and stake them again. But I tend to become more bullish on the underlying CRV token. In the early days, CRV was only useful for governance. This has now changed. So you might want to check out the Ethereum-based Curve website, and then you can see how you can stake your CRV. So there is also staking there. You can quite a bit of APY on Curve if you lock this up for a while. So staking of CRV is requiring a lockup as well. But I haven't staked CRV yet, so I can't say too much on that. Now these pools, they don't look too enticing to me, so it doesn't make any sense just for Curve to bridge over your money to Arbitrum, at least in my opinion. The 2 pool doesn't pay too much. Here we've got some euro price fluctuation risk, but normally, exchange fluctuations between traditional currencies aren't too great, they're too huge. But still, right, for 15%, I don't think it makes too much sense to get into that kind of. I rather prefer those 12% here for AAVE on the AVAX pool. I think that makes more sense. And let's go to Harmony, and that was actually the reason why I started making this video. I wanted to go through all of those, but that's what caught my attention here. The return on this stablecoin pool, which we're going to see soon, is just insane. The volume is pretty low, right? But we've got all kinds of coins here. And now I see I actually made a mistake here. So this is again just a V2 pool, but still, right? For a Bitcoin Ethereum pool, this is by far the best that we have seen so far. So this is not getting paid out in cash directly, right? This is getting paid out in wrapped Harmony 1 tokens, especially when the rewards here are so high, you might consider at some point in time to swap this back over to stable coins, for example. But yeah, this is a high reward for something that I don't think is too risky. The only quote-unquote risk you have here is one token fluctuations, right? If the one token depreciates a lot, you've got a problem. But still, your base investment here is independent of that, right? Your base investment is only exposed to Bitcoin and wrapped Ethereum. So I haven't used the Harmony One blockchain yet, but I'm planning actually to do this. And I think I will deposit some money in here. Even though there is a bit of crypto exposure here, I still think this kind of return, 30% per annum for something that's relatively low risk, is quite enticing. Let's go to Polygon. So here are the Polygon returns, and interestingly enough, right, a very similar pool over here with Bitcoin and wrapped Ethereum, and the return is not as high as for Harmony, right? Harmony, we got 30%. Here on Polygon, we quote unquote only get 25% roughly. So you get 5% more every year. Of course, these numbers, they fluctuate, right? They fluctuate based on the price of the underlying assets here, and they also fluctuate based on the swap activity on Curve. And one difference is also here you are getting exposed to CRV, right? So when you don't claim your CRV rewards after a while, you do get more and more exposed to these price fluctuations as well. Here you get exposed to the one token price fluctuation. Let's look again at the stablecoin only pools. So here we've got again AAVE with around 8.5%. So to me, the AAVE pool looks way better here, right? Also a stablecoin AAVE pool, DAI, USDC, USDT, DAI, USDT, USDC. Basically the same risk as far as I can tell. So why not deposit here in AAVE instead of Polygon and simply bridge the money over using any swap, right? This does not look as good to me. I think the other pools we can pretty much forget here. Again, this Euro pool, and here the returns are not really interesting. So far, quick recap, the best pools that I can tell, if you want still a bit of crypto exposure, is probably here, the one on Harmony with 30%. And if you want to be completely in cash, so far, the AAVE pool here with DAI, USDC, and USDT that lends out via AAVE seems to also be quite good. We've got one more blockchain, and that's XDAI. And over here, we've got stable coins only for a annual return of around 14%. Paid out in a token I am not familiar with, at least fundamentally. I did do a technical analysis on Gnosis, but I didn't really look at this fundamentally yet. So it's not necessarily something for me. So yeah, there you have it. That's an overview of all the liquidity pools. The AAVE pool, I think, is pretty much a no-brainer. So I'm probably going to put a deposit in here. So I'll keep you updated on how that goes. And of course, I've never used the Harmony blockchain, so that's going to be my first move into this, and I will try to deposit over here. This is very nice, I think. If you enjoyed this content, please give this a like as well, because it will help the channel grow. That would be very, very much appreciated. And of course, don't forget to subscribe in case you haven't. Last but not least, there's also the premium membership. Feel free to check that out. The bitcoinstrategy.com link is also in the video description. We've got daily market updates on Bitcoin, on Ethereum. We've also got exclusive content on, for example, how to construct a portfolio. And of course, a private chat where you can ask me questions. We've also got a public chat that's to be found at Bitcoin Strategy channel. Simply search for that within the Telegram. See you next time. Bye-bye.